There's no question Netflix has been the envy of the media business for more than a decade now. Since Netflix started in the streaming business, all of the other big media companies who were big in linear TV have been trying to figure out how to get into streaming. And most of them have built streaming services now. Most of them are also losing money. But there is one interesting advantage that Disney has always had over Netflix, and that is the physical infrastructure or the parks and experiences that Disney has built. Now, the only real company that has built any sort of scale in that kind of business is Universal, the company owned by Comcast, NBC Universal. But Disney is still the biggest player when it comes to parks and experiences in the media business. And now Netflix wants to get into that game. So it's very interesting to see the moves that Netflix is making, trying to put their own spin on what Disney does. So I want to dig into that today and then highlight why Netflix is so interested in experiences. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first get to what Netflix is calling Netflix House. This is the announcement from Netflix that they're going to be opening Netflix House. There's going to be one in Dallas and then Pennsylvania. And as they say, imagine waltzing with your partner to an orchestral cover of a Taylor Swift song on a replica of the Bridgerton set, and then walking around the corner to compete in the Glass Bridge Challenge from Squid Game. So very clearly what they're intending to do is get into the experiences that basically mimic what they're doing on a lot of Netflix shows. They say you can enjoy regularly updated immersive experiences, indulge in retail therapy, and get a taste literally of your favorite Netflix series and films through unique food and drink offerings. So not necessarily an amusement park in the same way that a lot of the Disney experiences are, but more of an experience. So we've seen a lot of this in the media space where people are looking for experiences. This is a way for Netflix to offer up those experiences that are tied to popular Netflix shows. What is interesting with these is this is not a large place that you're going to actually go travel to on a day-to-day basis for something like a family vacation. These are actually built to be locations that are adjacent to popular spaces. So Netflix selected these locations because they're adjacent to two of the most popular shopping centers in America, boasting hundreds of retailers, high foot traffic, and proximity to major cities. These are going to be in former department stores that are over 100,000 square feet in size. That's a pretty big location, but not for a huge entertainment facility compared to something like you would see at Netflix, compared to something you would see at Disney, for example. So where exactly are these locations? Well, this is a look at Google Maps and the Galleria Dallas. You can see this is on the north side of Dallas. I don't live in Dallas, so I think it's just interesting to show this would be a fairly high foot traffic area because it's next to an interstate, major highways, all that kind of stuff. Exactly what you want if you're building a shopping center like this. And obviously Netflix is going to be leveraging that. This is where the location will be in Pennsylvania, in King of Prussia, just outside of Philadelphia. So again, another high traffic area with interstates. So that's the way that they're looking at building these attractions. So why does Netflix want to get into the experiences business? Well, let's look at Disney's results on the experiences side. You can see here that over the past 12 months, experiences for Disney, so this includes everything from cruise lines to the theme parks that have been built over the last 50 years or so, generated $33.9 billion in revenue and $9.6 billion in operating income. So these are big businesses and very profitable businesses. Now let's compare that to Netflix's business. Netflix itself, the entire company, has $34.9 billion in revenue, so slightly more than Disney's parks and experiences, and generates less operating income, $7.9 billion in operating income. So from just a purely financial perspective, Disney's parks experiences is more profitable than Netflix. That may seem a little bit crazy, but that's exactly what the numbers show. And so this is why Netflix is looking at expanding its business into experiences in some way, shape, or form. Now, they don't have the same kind of content as Disney, and that's going to be fundamentally the problem. So what sort of experiences do you build? This seems to be the kind of thing, the smaller experience that latches on to the popularity of a shopping center or something like that. The analogy here, I am in the Minneapolis area, would be the Mall of America. There is a theme park in the middle of the Mall of America. That was Camp Snoopy for a while. Now it's, I believe, a Nickelodeon universe. This is kind of a more adult extension or experience similar to what that is in the Mall of America. So an interesting way for them to try to at least take a shot at getting into experiences. But this gets to why I think Disney is such a powerful company in media, even compared to Netflix. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. What Disney has always had going for it is the institution and the inertia behind the entire business. So that's not only the back catalog that the company has that goes back decades to all the animated films that have been some of the most popular movies in the history of film, but also the studios behind them. So you have Marvel now and Lucasfilm, but you also have Disney Animation and Pixar. This is how you build the infrastructure from a content perspective to be a go-to content location for kids and families. Then there's the tens of billions of dollars and decades that have been spent building out the theme parks all around the world. Disney has said that they're going to spend $60 billion over the next decade, about double what they normally would, to expand those theme parks and build more cruise lines. So that's just going to ingrain that physical Disney identity and those experiences that are much more expensive on a per person basis than anything that Netflix can do. And so this is the fundamental challenge for Netflix, is how do you catch up to that in a physical perspective? And there's just no way to do it without spending tens of billions of dollars and decades building out theme parks. They just don't have the content to do that. And I'm not sure if they have the balance sheet to do it either. They are spending most of their money on simply buying more content and building out that content backlog. But it seems that even with all that investment, management has said that most of their content doesn't have the same kind of shelf life as something like Disney content has. So this is where I tend to lean from an investment perspective towards Disney, because you have those legacy studios, you have those legacy assets, you have the experiences business. There's so much inertia behind those businesses, both from a content momentum perspective, but also from the physical capital that's been put in the ground over the past 4, 5, 6 decades. So Disney's next step in value for investors is building out this streaming business, attracting consumers, building and licensing the content that is going to build a phenomenal bundle for both kids and families with Disney Plus, adults with Hulu, and then sports fans with ESPN. That's the real vision for Disney long term. And I think the foundation that I have always seen with Disney as a media company and building out streaming is that they have this parks and experiences business to fall back on. So interesting now that Netflix is trying to get into that business as well. But what do you think about Netflix's chance building out experiences? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.